Yes, that is right. This insane news could really restart this bull run and be the massive catalyst we've been waiting for so long now. Before we get into that, we're going to have to go through one of the biggest storms crypto may possibly have faced so far. I'm not talking about dropping down 70%, but I'm talking about fear and greed dropping even further than we've seen recently. But as I've said now for the last month or two, it's going to be monumental. Now, what is this news? Well, this news has a lot to do with stablecoins. Now, hang on. I know stablecoins don't go up or down in price, so it's nothing sexy to talk about here. But when I unravel what I will in this video, you will quickly realize there is much more happening here that will benefit all of the altcoins and Bitcoin in the next few months. This interview here with Charles Hoskinson is going to outline some more of what I'm talking about. So here's what Charles has been working on and what he's had to say recently about the stablecoin situation in the United States.
There's two bills that are currently being discussed in the House and Senate. The one that's most likely to pass in the next 60 to 90 days is the stablecoin bill. And then the second one's the market structure bill. Once those two bills pass, Apple, Microsoft, Google, Facebook are going to say, hey, we're crypto people now. And so they're going to put wallets in their platforms because they can capture an enormous amount of the market. When you add their user bases of 3 billion people. And when they have those 3 billion users, it's like they have cryptocurrency wallets right in Windows, right in Facebook, right in your cell phone apps, right in iOS, because they now can legally hold stablecoins and use stablecoins. They're going to do it because they don't like paying the processing fees on credit cards. So they'll issue their own stablecoins or partner with people to do that, and they have feeless transactions inside the system. Once that's there and you have a good regulatory regime, it's very easy then to click a button to create yield products on top of that. So that's what's going to bring the value flow in because the users already are wired into that system. Their money's already there. Their credit cards are already there. There's just too much temptation not to do that. Once these two bills pass, that opens the floodgates, and that's 3 billion people that enter in.
What we're talking about here is news and information that trumps almost all of this news combined, putting some of those crazy predictions of $300,000, $400,000, $500,000 Bitcoin price into a realistic perspective. This information has also been recently shared by Paradigm, a quite large and S-tier venture capital firm in crypto, sharing some pretty interesting insights when they surveyed about 300 professionals working at a range of institutions across the financial service sector. So what did the report conclude? Well, first of all, the survey included a whole range of different respondents, from people in the finance and investment sector, operations, right through to IT and senior management. The results were very interesting. First of all, the global financial system consists of a network of privately managed ledgers connected through a grid of disconnected communication protocols. What does that mean? Guys like Quant Network, guys like Chainlink, who have been working tirelessly trying to connect the Web 2 financial system, are doing so because, as they say here, it is disconnected and it is completely siloed for each business. And that is so bad, because when you're doing large transactions, remittances, for example, or trade finance across nations, even internally within a nation, and you have to manually, via a pen and paper, write down some of these particular deals on a contract, for example, or when you have things like even auditing within a business itself, reliant on humans and human error, there is a lot of problems that come with it, a lot of expensive problems that come along with it as well. You essentially do not have a business, we do not have a world in which we are connected as the 21st century should be. That is fundamentally what this report is pointing out, which again is what Quant, Chainlink, XRP, XLM, even just general purpose blockchains like Ethereum and even Bitcoin are trying to solve. And finally, these guys are catching on to it. So there's a very big problem right now with institutions and their settlement options because everything is on their own framework. Everything on their own framework is very slow and manual. That is why, as they say, there is an increasing interest in crypto, blockchain, and just DLT, which is this kind of technology in general, with DeFi even becoming embedded in firms' strategies, which is super interesting. So interesting, in fact, that 76% of them are currently already involved with crypto, like Fidelity, VanEck, CME Group, and even BNY Mellon. There's about 3 times the amount of engaged firms than there is not engaged. 86% of them are actually currently already involved with blockchain and DLT technology, and 66% of TradFi firms are doing something with DeFi. And that's, of course, where BlackRock comes in, Franklin Templeton, Visa, MasterCard, PayPal. These traditional finance firms are now realizing, there is a direct use and an actual benefit to the business, creating more net profit if we go ahead and use this infrastructure. Now, I've already shared with you guys this video, but I want to play it again because I find it so interesting just how much money can really be saved here by just simply switching already existing services on chain.
When you have huge advocates like BlackRock, I mean, my favorite quote from somebody at BlackRock, it wasn't Larry Fink, but it was basically, they said, if we were able to tokenize all of our money market funds internally, so that we just manage them internally on tokenization, we'd save between 10 and 12% of our annual cost in that business. That is not a small beer at BlackRock. That's a lot of money.
So it's for that reason and many others that traditional finance firms think it's inevitable that DeFi will eventually be critically important to most core businesses, as well as crypto and stablecoin technology in general. In the next 1 to 5 years, the majority of respondents think DeFi will have little impact on their core business. So, aka the rest of this bull run, if you still think it's around, I definitely do. And the bear market, pretty much to the start of the next bull run, for the most part, there won't be much actual adoption. However, in the next 6 to 10 years, there is going to be a huge shift here where a lot of guys are going to be using this in a moderate way. And almost 1/4 of these respondents said it's very likely that DeFi will play an important part in their business in the next 6 to 10 years, which is just insane. This is one of the main reasons why I do think this bull run is gearing up to blow up just like the dot-com bubble, in which will pop just as hard, if not harder. But what will come out of it is things like full regulation, is things like what we are talking about in today's video, which is the application of the infrastructure for the best cryptocurrencies within these major TradFi and existing business firms. Now, the biggest headwind for DeFi, and I think the overall cryptocurrency market in general, from unlocking real economic efficiencies in the short term is the regulatory environment. Now, in my opinion, this is one of the things we need to send us into the stratosphere. I'm going to show you some more clips in a second, guys. We're talking about trillions of dollars coming through to the cryptocurrency space on standby, and it's already started. The two reports Charles was talking about before is, first of all, the Genius Act. The Genius Act here is guiding and establishing a National Innovation for U.S. Stablecoins Act, where President Trump has indicated he wants to actually sign this into legislation, and payment stablecoin legislation is poised to be enacted into law later this year. It's already passed a few important stages, so it's on the exit, basically. It's on the final stages, as you can see here. The next one is FIT 21. We've known about this one for quite a while now. This one is just simply the Financial Innovation and Technology for the 21st Century Act, just putting into place the correct guidelines and requirements for cryptocurrencies to be either commodities or securities under fair judgment and ruling by the SEC. So this is going to remove the Howey test. Now, this is really crazy timing, of course, and nothing is a coincidence when it comes to these big guys, because USD1 was recently announced. This is World Liberty Finance, so one of Trump's companies, if you will. These guys are launching their own stablecoin. Again, obviously, Trump's going to want to put in his own stablecoin and therefore pass the policy. The Bank of America CEO has even gone ahead and said it's pretty clear there's going to be a stablecoin. If they make it legal, we'll go into that business. This means other bank chieftains will probably follow suit. What this means is something that Charles mentioned in this video. Billions of people will soon have access to stablecoins. But what does that really mean? What does have access to stablecoins really do for our altcoins and Bitcoin price? Well, simply, stablecoins are the only way pretty much to be able to buy cryptocurrencies. And when you have companies like Apple or Facebook or even McDonald's, for example, creating or using a stablecoin of their own, they're going to allow their customers inherently to easily onboard into crypto, which is why I said early on that this could be more important than any of the news, bar the strategic reserve, maybe even bigger than the reserve news, because it's going to allow billions of people to custody stablecoins, which eliminates the biggest hurdle of all. The biggest onboarding problem with these newcomers to crypto is actually getting in, owning a wallet, and being able to use a stablecoin to buy something like Bitcoin or your favorite altcoins. All you have to do from there is press buy. This was recently mentioned at the Crypto Summit, where it did seem quite lackluster, but the devil is in the details. A clear and structured framework is in the works regarding stablecoin regulation. Of course, we know about this now, right? The Genius Act, but I think as this progresses here, as Charles said, the next 60 to 90 days could be massive. And this is where I'm expecting a lot of this noise and this headwind to blow over. A macro expert that I do follow, Frankie, has said more pain, a little more after that, and then everything everywhere all at once. Once in a lifetime euphoria, months and months of extremely bullish news will be priced in through a matter of days. This, I can't guarantee it, but this is what I'm expecting to happen after a little bit more pain, after the storm is finished. Fidelity is launching their own stablecoin. These guys have multiple trillions of dollars in assets under management right behind BlackRock. Let's not forget, BlackRock also has the Build Fund. PayPal has already created their own stablecoin. PYUSD is a stablecoin backed by secure and highly liquid assets. Buy, sell, hold, and transfer it in our app or on our site. I think this is a great barometer for what is to come. MasterCard, working behind the scenes in secret, they tokenized about 20% of all their transactions in 2024, and they built out the multi-token network in which Ondo recently joined. Circle, the issuer of USDC stablecoin, has also now chosen to IPO. And as they say here, they're betting on the legislation to be finalized soon and betting it'll be a good thing. Now, the percent of the M2 money supply currently tokenized as a stablecoin in crypto is just over 1%, a tiny, tiny fraction. So you best believe as this begins to pick up, as legislation becomes more clear, and as other countries and jurisdictions jump on the bandwagon after the United States, you can damn well bet this will likely become more correlated than ever before. And of course, with the highs in M2 will come highs, likely, of course, in stablecoins, and soon after, of course, that money will flow into Bitcoin and altcoins. Let me clarify, not all of it will, but I do think a fair chunk will, as it has throughout the Bitcoin and crypto history. So basically, we are on track right now for an early, I think, death cross here, which is where the 50-day SMA moves beneath the 200-day SMA. And the reason why I pointed this out was because I mentioned it in a few videos ago as not really knowing when the major drop will come and what that will actually be, or whether it happened already. Now, I do think the major drop that does cause a death cross has actually already happened. We had a 23% drop here about 44 days ago from the time I can expect this crossover to likely happen. Again, this is a lagging indicator, so not necessarily true, but this is a good sign because I think a brunt of it is already done. What may come now is just this slow slug until we have the next golden cross, which could be around 58 days away, about the 3rd of June. The reason why I say 3rd of June and have specifically 58 days was because the last time we saw a death cross and then a golden cross, it took about 78 days. And before that, we had about a 30% drop. And if I go back to the only other time we've seen a death and golden cross in this cycle, it took 48 days. So that's about 58 days being halfway between the two. And of course, this was only a 17% drop. So being a 23% drop, it's nice in the middle of a 17% drop and also a 30% drop. So therefore, it makes a bit of sense. I don't necessarily think the golden cross itself is the reason for massive pumps. But of course, this is adding further fuel to the fire to make people want to buy more. And for how abrupt those tariffs were, I think most of us were expecting a lot less impactful tariffs. That was the kind of news we'd been told. I think crypto and Bitcoin specifically has held up quite nicely since. And I think the market is beginning to digest this news more and more, considering the fact that it was the biggest announcement of tariffs we've heard so far, and we didn't have anywhere near as large as a drop we've seen on less tariff news before. But that hasn't stopped the crypto sentiment from plummeting from about 34 down again to 25, teetering on, again, extreme fear. We have to go through this. Whether or not Bitcoin's price drops significantly or not, it's going to feel bad. It's going to feel like that storm is still going on. For everyone panicking and freaking out right now, first of all, I don't blame you, and I do sympathize for you. But remember, zoom out. If you were buying Bitcoin at $100 every week, just once a week, over the last 5 years, you would have invested about $26,000 and have about $81,000 today. That's a 209% increase. So imagine 5 years from now, or 10 years from now, assessing stablecoin dominance, which is this bottom chart over here, and comparing it to Bitcoin's price, or the crypto market in general, I think is a pretty smart idea because it's inversely correlated. When stablecoins gain dominance and goes up like this, Bitcoin and the market goes down because money is flowing out of risk assets and flowing into safe assets. Again, stablecoins are just simply derivatives of the US dollar for the most part. So again, they're inversely correlated. Now, notice that back in this particular channel we were in over here, this sort of expanding but sort of descending channel, we actually noticed an ascending channel over here for stablecoins. So stablecoins were going up and creating higher lows and higher highs, while the other market was doing the opposite. But we did eventually break out of this, as we could see down here, with the stablecoin dominance as well. The same thing's playing out again here, but on a much steeper time frame. You can see rather than this gradual, like over, let's just call it almost 3/4 of a year time frame, it's happening much, much faster. Stablecoins are gaining dominance extremely fast, and the lead so far here indicates it's likely to continue at this rate, while again, Bitcoin in the market trends down. So what does this mean? This just simply means expect more short-term volatility. At least traders and guys in crypto they're selling risk on assets. They're preparing for more uncertainty. So if we then take those two charts, and rather than looking at it through a whole bunch of messy moving averages and nice pretty colors, let's add the death and golden cross to the dominance of stablecoins. And what you'll notice here is pretty interesting, actually. What we find is that there is always the inverse cross for stablecoins around the same time period as there is for the rest of the market, particularly Bitcoin. Bitcoin has yet to have, again, that death cross. We are on the very cusp of it. Some may say it might not even come. I mean, it does depend who you talk to. But again, you can see here that we've actually already had the golden cross for stablecoins. Because they're inversely correlated, of course, the golden cross for stablecoins is a death cross for the rest of the market, essentially, right? But this is a good sign because it tells me it's almost certainly going to have a death cross, which means we will, at least based on the rest of the cycle, likely have a golden cross to soon come. It could be 58 days, it could be 78 days, it might be June, it might be September, but it's likely going to come. And that 60 to 90 days Charles Hoskinson mentioned at the start of the video, well, that could definitely come around at the time when a lot of these charts begin to turn very bullish. Of course, like I said, the biggest catalyst of all is if the stablecoin legislation and the US crypto legislation passes and we have a flurry of other, countries following suit, and we all of a sudden have every company having stablecoins issued on their platforms, and then all of a sudden banks are allowed to not only just custody it, but offer it to their customers, and then we have this insane growth in stablecoins. If that best situation happens, of course, what does that look like for a chart like this? Because obviously stablecoin dominance will go through the roof. Therefore, when this goes down, which is obviously a good thing for the rest of the market because that means money is flowing into risk on assets. Well, what does that mean? Well, I actually think this will probably still go down. The reason being is because the money from stablecoins flowing into risk on assets at that point may likely be far greater than the money still accumulating in just stablecoins. Now, truth be told, I don't think it'll look exactly like that and plummet down to this nice range of being kind of finding the bottom of stablecoin dominance in. But what I think will happen is this will likely spike quite quickly depending on the amount of adoption. But then the pullback, whether that comes at 12% or whether it breaks highs at 16%, that pullback that occurs will be much more significant than any prior pullback that has ever happened before, simply because the money flowing into the crypto market when stablecoins have maybe added, let's just say, $1, $2, $3, or $5 trillion to their market cap. We're not talking about a few $100 billion here, right? Whatever this has in the past. This went from a high of around here at 2.2 trillion up to an absolute max of 3.6 trillion. So it basically added, let's just call it $1 trillion. We're not talking about $1 trillion. In the same percentage drop, let's just say, okay, in this situation, but happening up here, that may be $5 trillion into crypto, which is monumental. So ultimately, stablecoins provides an open door for new money to come into the space, which will obviously feed our bags ultimately. An additional aspect we can look forward to as well is the fact that the stablecoin market cap in this white color here and the Fed's balance sheet in this green color here, they're actually correlated, not to a perfect degree, but somewhat correlated because as you can see here, when the Fed's balance sheet rolled over from QE into QT, so did this stablecoin market cap. It did not happen with Bitcoin. As you can see here, Bitcoin topped out way earlier. This pump here in the Fed's balance sheet was actually preceded by this pump in stablecoins. As a matter of fact, the beginning here of QE way back in 2020 looked very similar to how the chart on stablecoins ended up panning out. You can see here sometime later. So why, you may be asking, why is it that the Fed's balance sheet is important in this? Well, as we know, the Fed is going neutral in June, maybe even earlier. And as we know, that's a very good thing considering we've had exponential growth in stablecoins already without going neutral and definitely without having QE. That is a very good thing for stablecoins because, again, it's a derivative of the dollar. Boosting economic growth regarding QE is going to always benefit the market, which will always, of course, benefit derivatives of the dollar. Stablecoins act as a sort of risk off, like having capital on the sidelines ready to invest in risk on assets, which is why looking at things like this is very important. This is SSRO. So what is the SSRO? Well, it's the stablecoin supply ratio oscillator. So it's a bit of a mouthful, but to cut it very simply, essentially what it does is it takes Bitcoin's market cap and divides it by the stablecoin market cap. And what you get here is when you put it around an oscillator making the middle point here 0, so highs and lows are positive and negative, you get these red and green zones towards the endpoints. And what this actually shows is something very interesting. When the score here is 4 or above a score of 2 in this red area, it means that the market cap of Bitcoin is significantly more than the market cap of the stable coins, which means that essentially any money that would flow from stable coins into Bitcoin is not going to be enough at this point, and any point in the red zone to continuously keep sending it higher and higher. Essentially, imagine that one person was in the market and this person had billions of dollars in their stablecoin wallet. Obviously, if they keep spending all their money trying to buy Bitcoin, the Bitcoin price will keep going up, you can see here, but there will become a point where they won't have enough money anymore to keep sending the price higher and higher. And that's what happens in the red zone. When it's in the green zone, the opposite, of course, happens. You have Bitcoin's market cap being less than the stablecoin market cap, which means stablecoins have a lot of money. Basically, our guys been saving, and therefore, at this point, you can see right here, which is the equivalent of here, which means that we have a lot more money in stablecoins to throw into Bitcoin, or even not even just Bitcoin, right? Altcoins in general. So when it's low, it's a good time, the DCA. When it's high, it's probably a good chance that the market's overheated. Not always, you can see right here. It's never a great 100%, way to time the exact top of the market, but in collaboration with other indicators like the mvrv score you can see here, which is the market value to realized value. And you can actually clearly see when paired together that there are actually overheated zones that you may want to pay attention to, and zones in which you can decide to DCA into the coin or into the market again if it's oversold. So I'll be talking a lot more about the SSRO, and as we begin to see more money from stablecoins eventually flow into crypto, this chart is going to be more important than ever. We actually had a bearish indicator over here, essentially a death cross for the SSRO. This is okay though, as we all know, there is likely going to be some sell pressure for risk on assets like Bitcoin in the short term, or at least volatility, but this is actually a good sign to me because this signs that we are gaining stablecoin market cap for the next move up. So this is kind of like us recharging our batteries or reloading the shotgun. Essentially, once that gun is loaded, once the battery is fully charged, then we are right for liftoff yet again. So hopefully this is paired with that stablecoin bill passing, which could explode us a lot higher than many expect. Again, guys, assessing things like the mvrv is important as well because we have actually also had a death cross here as well. All this in combination, it just proves the point that the next few months are going to be a little bit choppy. While we wait out the storm, I think it's important to just focus on the bigger picture. Don't get too caught up in crypto. If you've overexposed yourself to the market on these relief rallies, if you can, non-financial advice, maybe consider taking some profits off the table, or maybe consider just removing some risk and being content with the money you have in the market. But that's going to be all I have for this video, guys. I'm sorry for no video. I'm sorry for the croaky voice. I unfortunately have been sick recently, but I decided to get a video all out for you. This is very important information. So if you did like it, if you did find it useful, hit that like button, and I'll talk to you all tomorrow. Take care.